Alrighty, guys. Welcome back. Good afternoon. FOMC day is over. What do we got left? We've got dollar up, stocks down, yields up. The classic trio, which is nice. Some correlation there around the sort of hawkish attitude. Today we did have the meeting about or the meeting about the talk about talking, right? This was the talk about talking meeting. And so what was said? We, in terms of the dot plot, have 13 out of 18 officials looking for a rate hike by the end of 2023. So a majority thinking that 2023, by the end of it, will have some sort of rate hike, which is, again, where we were seeing that average sort of look through. That's what the estimate was. And then 11 of those were also thinking a possibility of two in 2023. There were four uh, that were thinking 2022. That went up to 7. Uh, in terms of the dot plot, even Powell came out and said this is probably the one time that, or it's not really the one time, but it's the time that that sort of metric doesn't really matter. What the officials are sort of estimating because it's preemptive, right? And so a big thing about what we saw with the meeting is that even though we see inflation up and CPIs up and everything, it's again sort of the way in which the labor market always lags. And so when it comes to again the biggest thing right now is the asset buying, the 120 billion a month. We are not seeing so much that going away as soon, right? And so when we see that this dot plot has changed in terms of interest rates, we don't see the same change in terms of the asset buying, which was sort of what I talked about being, I think, the more important thing because, again, it's not going to be really until next year that we can change our minds on even doing something with the interest rate, right? It's too preemptive. And so I think that was a good point by Powell because I think that's how at least those of us in the market feel is that, okay, interest rates is one thing and we're all pricing that they're going to come back, sooner than later, but it's not for a couple of years. What we care about is the asset buying. And so asset buying is not off, not off the cards. We're still doing it, at least through this year, it looks like. And so we had the talking about it meeting. They're going to talk about it. So now, next time we hear from the Fed, we're going to be able to hear what their plan is of doing with that 120 billion. So now that puts us in sort of on deck in terms of understanding the information flow. Again, this in terms of since 2020, they've been more upfront than ever. Really, just talking to us about everything that is going on in terms of thoughts, opinions, and so we're getting all that right. And so that's sort of what today was about. It does seem like they do see the labor market picking up, and so that has been the at least the slowest moving part of the economy. We see inflation rising, CPIs, people spending, but we don't see labor picking up as quickly. This no is not due to paying unemployment benefits or something like that. That was not the problem. They again talked about how wages have to increase with the inflation, and that takes more time. That actually takes a longer time, which is why when we usually go through these things, they have to wait. You literally just have to wait, and so we'll see by the next meeting if things change. I don't know if the market is going to be able to price that, and so if we look now to today, the movement we had, obviously a pretty hectic day for those of you that were active and we were watching. I think a really interesting day now that we look at it in hindsight. During the day, of course, you can have different opinions on it. Our opinion is always to be buying the dips, any lows. We knew there was going to be volatility when there were, we came into the day with no volatility. We knew there was going to be volatility. That's the important thing here. And so that volatility acted in a lot of different ways. It, first of all, when we look at the average, acted as the sort of jolt to provide this whipsaw that we had, which if you look at sort of the timing, the timing is spot on, right? In terms of the conference and then finishing up and digesting it, right? Uh, in terms of value growth, these different dynamics, when we look at banks, you can get a very good glimpse again of the dynamic that we know this is good for banks. We saw banks coming down in the morning. We saw banks coming down for a little bit here going into the meeting. We know that anything that was going to happen was good for banks. Interest rates rising sooner is good for banks. So we did see that spike come in. The interesting part was really, I think, that whipsaw back on really mega caps, which led the growth rally towards the end of the day, which we've been really talking about the most. That's what we have. Apple was green on the day. Apple was up almost 0.5%. Amazon was up 1%. Amazon being a little bit more tied to the economy, getting a benefit. Microsoft, Google break even. Facebook was down more. This again is a little bit of a different chart. There is more volatility here, so we saw this come down. Had the same whip, but this is more tied to sort of the move from yesterday into today. More technical. This is also in a nice spot for maybe a short-term trade to think about this little consolidation in here. Again, Facebook being a little bit sharper, but in terms of mega caps altogether, this move was very nice today. Through another economic event. If we just think about a day that is an economic event, the last time we also had those CPI numbers come out, market rallied as well through those numbers. And so, doesn't matter what you read, we can see that the Fed had changed their mind. Was it a surprise? If any article says that it was a surprise, that's literally the dumbest thing in the world. How can we be surprised when that's what we literally all we could talk about was that the Fed was going to be increasing sort of the attitude because we all saw the numbers, right? They have the same information in that we do. They have it obviously better data, but the trend doesn't change, right? We know that inflation was there. We've been sort of setting up our positions for a long time for any of that, right? We saw energy continue to rally, right? Energy just held break even today, but we've seen energy rally through this with it being the sector that's leading the market. We've seen banks continue to rally through this idea of inflation. When we get the days in which it solidifies it again, it goes bid from when it was pulling back. We've seen this risk on buying and growth. Now that there's understanding that this idea of inflation and what the Fed now just mentioned again today of we're going to have to pick up interest rates is not going to stop these mega caps. This move will not stop due to the inflation. There's now an understanding that, okay, this is going to be a bit of a baseline, right? And so really, when you look at this candle isn't really going to be much of anything, right? And we're continuing to get this where it's not really the individual days that matter, it's the week to week. And we've known that and seen that, and that's why we've changed our tone. Today did nothing to change that. Today did absolutely nothing to change that. There was some volatility intraday. We knew to be careful about making decisions based off of those individual candles. Like if you're looking at a 5-minute, 15-minute chart during that time and you're making a decision off that, that's a mistake, right? Somebody today sold at a low and bought at a high and are going to do it again, right? That happened today, absolutely. Overall, the average, I do like the movement we got today. It's very nice for continuing to move through this week. I would say in terms of the weekly structure, we're going to finish the week higher. That's what it looks like. We're still in all-time high. If we sort of again think about it as a range up here of all-time high, we are there. That we're actually there because we put the all-time high on again this week. We've been trading every day through it, and so we are right there. In terms of where we open tomorrow, I think is the interesting question because the bond market is going to digest a little bit more and really digest from international markets, right? Whether or not China is bid on this or Europe's bid on it is a question, and I would just imagine though that they're going to follow the tail end of our action. There's not really anything here that's negative for anybody. And the thing again to see here is that yields went up. Everyone wants to sell their bonds. Where are they going to go with it? We saw the dollar rise as the bonds were being sold. Where's that money going to go? This is the only place. It's the only place the money's going to go. There's just nowhere else. And so, again, we should see quite a bit of bid at open. So again, the aggressive approach stays. Again, the best day to enter was yesterday. Mentality still going on. If there's a support buy to buy, you buy it the day it's happening, not the next day. Those days are over for now. That's what we're doing. So today was another example, some pullback buys. On our individual list itself, we had quite a bit of bid. We had quite a bit of bid on tickers that really didn't give a shit. We before going to lunch, I was saying I bet we're gonna get at least 5 tickers that are over 10%. If you round this 9.71, that's 5 over 10%. So looking at some of the ideas, we see bio continue to put points on. Today was a big day for automobile, sort of the automobile car parts, the ideas of consumer spending, right? And so we saw areas there that did well. Also, the smaller tech side of things did well. We saw a lot of our semiconductors have a lot of action today. So, again, a lot of these, whether we want to call them sort of current market sort of participants, whether they really take over some sort of market cap or have some sort of market share, I should say, it's not very much. They're smaller. The bigger companies did do well, but it wasn't as big because they're much more tied to the market. And so when we talk about small to large, things that were a bit smaller did better today. Anything that was tied to finance, those tertiary markets, asset managers, anything with sort of a trying to use lending club here as an approach. It's just a tertiary finance. There's so many different ways in which that market works. So the sector in terms of finance did very well. Again, this idea of interest rates, this is going to continue to be the case, which is why I've brought it up a lot. In terms of the clean energy sort of question and problem we have right now, we did see these rise again today. Again, it's just all over the place. And I think it's just indecision and uncertainty fueling all this. Most of these probably are going to get moved through the end of the week just due to, I think, growth is going to continue to go bid. Semiconductors going bid. They're tied to semiconductors. So we'll see there. We mentioned travel being an interesting move today. We saw airlines start to pick up there after open. It's, again, another nice risk area to be in going through the end of this week, going to next week, continuing. We're, again, in a place where I said this after we get CPIs, we have no more economic data coming out. Again, we had FOMC, but it was just about things we already knew. We don't have any economic data come for a while, so our trend is going to continue. We've solidified it, so most trends are going to be held, right? And that's, again, why we're being as aggressive as possible, and we're going to be taking at least positions that are not just looking to capture long term. We want to get exposure to right now, right? And so these last couple of days here of this week, we're going to continue with this approach of being aggressive, making sure again that we're not let's say taking this mentality of a long trade, right? And we know we're going to buy every single dip that comes from this. That cannot creep into the other positions that we're trying to take on a short-term approach. And today might have been a day in which that could have crept in. I think things like Tesla, for instance, right? I took this position. We did well. We got stopped out. And then I talked about, well, I'm not going to take this on the pullback. It's not the same as when we looked at the other mega caps. All of those can be bought on pullbacks. Charts like this here, we want to be careful about a day like today because this pulled back 3% yesterday after it looked like we were getting a trend coming. And now you're in the situation where you get this candle today, almost 1%. I didn't buy this candle today. We have a lot of charts that look like this. This is a little bit of bait right here. Maybe it goes up. Maybe it does. But this is not, I don't have a good enough reason to go buy here, especially when we are looking at this sort of culmination of everything that happened today. A lot of different volatility involved. It's not very accurate in terms of price. So we have to give it some of these charts some time. We want to be really taking the opportunity cost angle and saying, okay, is this better? We have two easy ways to do it. If you're buying anything that's tied to the economy value, you look at banks and energy. If it's not better than those two benchmarks of sectors, then don't buy it. If you're doing anything on the growth side, if it's not better than those 5 mega caps, then don't buy it. That's it. If you can't seriously convince yourself to that what you're buying is better than one of these charts, right? If it's not better than this move, then you can't buy it. That's what I would say. Because if you're buying something that's pulling back so deep, that your excuse for buying it is because it's low, it's a discount, then again, you're really pushing it right now. Right now is not the discount buying sort of time. We are buying pullbacks that are a part of very bullish moves. I'm talking about if this pulled back today downwards, then you'd be buying those dips, not a chart that's been trending down for, a month. Not buying that dip. That's not the approach. And so it's really easy to take the long-term trading approach we've had where you're buying those sort of things that have been, happening over a long time. Right now, we're looking for the things that are actually leading and going to continue to put points on because, again, this is a trend that's being established. We should really use the cues here. This is a trend that's gone through CPIs and now FOMC, and we're continuing the trend. Whether you think today is going to continue the trend or not, the reality is it didn't. We're not breaking down, are we? We whipped back up. We're solidifying this trend. We're continuing. If you buy something, and I thought about this, we've been joking about sort of the traders and ideas on TradingView of people that use the indicators, right? They use their moving averages and they got a line and they're trying to make decisions. Well, all you got to do, I was dicking around with it a little bit during lunch. Here's what you do, right? You're looking at a growth chart. You're like, I don't know if I should buy it. Throw the cues on, right? Compare it. Compare it with the cues. So you go to your chart, compare it, and then throw the cues in there, right? And then just see if that line, right? Use it just like you would use your other moving averages when you make the excuses for, well, if the underlying ticker, the candles here, go past the line, then that must be bullish. And if it crosses below, it must be bearish. It's got to be better than the average. If it's not better than the average, then don't buy it. All of the mega caps, again, Apple being a little bit different, so this chart is why I'm using it because it's a little bit of a different story. All of the mega caps are better than the average. All of them. They're all better. All of them. If it's not better than the average, don't buy it. That's it. Because we don't trade average. And right now is a time in which we're taking advantage of the leaders here, right? There's a lot of tickers that look like shit. This is reality. A lot of them look like dog shit. And they have this lie right now. They have just this ultimate lie and bait that they have bid, right? Like, I don't know if this chart's going to go bid, right? But do I want to be a part of it right now? No, I don't want to sit here for 2 months. I don't want to sit here for 2 months. I do think COVID winners will come up, but it's these kind of charts that may randomly put bid days on and then it means nothing, right? Remember this day over here? Etsy put 7% on and I was like, oh, well, maybe. You know what? Maybe we'll. No, don't even try to convince yourself. Go compare it to the average. Throw it on there. Nope. See that? See the difference between that? That's minus 18% right there over what's this? For in the last month. No, that's not what I want to buy. Okay? So use that as a your real quick opportunity cost analysis. When you do it with banks and energy, it's going to be a little bit different. Use it again not as being above the percent gain because energy's gained like 60% or some shit now. So not in that way, but you get what I'm saying because again, at the end of the day, if you're buying something that is not moving to the upside, then you're being a part of the problem and you're getting sold on, right? Other tickers, retail did well. In terms of AMC, though, this sort of thing, it was all sort of break even today. I think this was a little bit tied to the market. And again, some of the very high volume things were really into the market, sort of average. Otherwise, a lot of the retail did well. They didn't really care about FOMC at all today, which I thought was nice. I think a lot of them are still tied to options. We should see some moves here these last 2 days. I'm really excited to see if sort of what I've said is going to sort of happen. I do think we're going to get a lot of volatility in terms of the movement to the upside if we're able to move through the underlying enough. Again, for a game event to trigger, the underlying would need to move to the upside enough to break through. For instance, I talked about like the AMD move here, right? Today really fucking through with that one, right? This move through here, it's hard to get a game event to the upside if you're going to the downside, right? So these sort of things are not happening. This, though, can turn into a pretty wild event, and that's where I think there's still some some reasons why a chart that this finished at basically the same price it did yesterday, this here could actually add to it, which is why I want to bring it up. If you have a chart that was trading at, again, the reason why we talked about AMD having a sort of a gamma move is it traded at the same price for a long time here. If a move it comes down to the downside like this, but it came right back to the same price, then that's more calls that just got bought down here, right? So you're continuing to add quantity and quantity, but you're staying at the same value. This sort of thing could lead to an upside move if you're going to get that underlying move. I just don't see some of these charts though making it through. Like you're going to need to put a percent or two on going in towards Friday. Some of them are just not going to happen. It's going to be very obvious if there is one, right? If momentum gets going, it's going to be obvious. I would say that this is your chance to get heavy into momentum trading these last like 2 days here. If something is getting momentum, it's going to be very hard to screw that trade up. You see the momentum, buy it, and make sure you're just going to make sure you're getting out before there's some sort of breakdown of that trend on intraday chart, right? I think that's what we're going to do tomorrow. I'm going to be sticking to some little 5-minute charts and looking for moves and just buying shit. Literally just buying shit. I think that I think that's definitely an approach to have. We're seeing a lot of tickers have their own velocity. We're past FOMC now. It's over now, so it doesn't matter anymore, right? We did it. We got the answer. We can now go back to playing the game. The other thing I'm gonna just mention here is I talked about this home builder idea going to FOMC. We didn't see this do much of anything, not much of anything, and so it's interesting here. Whether or not we get another this move here is I think a question, but I think when we going into the FOMC, we're expecting some volatility. We got no volatility. I know this kind of seems maybe like volatility, but we just kind of traded flat with it. It's going to be interesting to see if this volatility picks up here because I think this is the area that's most real to sort of people. We feel the housing market and sort of its consequence of the inflation we're seeing with commodities and lumber prices. I think that's a thing that people feel the most in a physical sort of way. So I think that this will have a lot of attention. This got no attention today. I'm going to be watching this tomorrow because I was expecting some sort of volatility, actual like trading to come through here. We didn't really see anything. So over these last 2 days, the week, probably going to be looking for a possible move over the weekend and see if we can. Obviously, this trade did not work out here today. So looking for that, not to double down on or something, but because the volatility didn't come like we expected. This chart is backwards still, right? This is a backwards chart, and it's due to the fact that it's in the equity market, and there's just better stocks to buy, right? And we talked about this today, the idea of something being correlated to another thing like gold being correlated to inflation. That may be true in some aspect, but the problem is that it's a tradable asset, and if you can't make more money on it in this moment, you'll go buy something else instead. It's just like housing. Housing is going up, yet we have the charts going down. That what's that correlation, right? Shouldn't the price be going up? Well, yeah, we know the prices should go up, but I would rather go buy Apple right now, Amazon right now, right? That's how equities work. So this is an area I think that we should look to continue to try to tackle because there are things that are a little bit more tangible in a macroeconomic sense that we know the numbers, we know what's supposed to happen. It's just a question of when. When will these things happen? So I'm going to be looking for that trade as well. The other thing is today, the healthcare side, the big healthcare companies had a very big day today. Watching these last 2 days is going to be, I think, important to see what exactly going on here because this was sort of a high volume day in terms of the orders, and it looks like we have new orders coming back on. If you remember when we used to look at the Anthem and United charts, we would see those orders coming through every morning. It looks like those orders are coming back on. That's sort of, again, the precipice of what we're doing here. It looks like we have them. We're going to be watching that as well because this, again, being a sector, not specifically bios, pharmaceuticals, but, again, the big healthcare providers. We're going to be looking at those. That is a very value-centric idea, but it is sort of the inflation sort of reason is mitigated in the reasoning, right? You're not really buying healthcare companies because of inflation, or you don't really care, right? There's not some angle there that you're trying to take. That's a place that we want to be, right? We don't have to be affected by other things going on other than by maybe an average, right? So I'm going to be looking at that as well. I think this was a really nice bid day today. So I'm pretty excited for our charts here to get going again. Of course, we were looking to re-enter them, and we're back in, getting going. And so we'll see. That's all a bit I have. I'm going to show you we're going to take a look at the Bitcoin sort of charts. We didn't see anything here today around. I was going to, because again, I said dollars up, stocks down, yield up. We didn't see Bitcoin do much of anything here. It doesn't look like whoever our buddy in TradingView Ideas that said this is where everyone's going to go as a safe haven. It doesn't look like anyone went here as a safe haven. So I don't think anyone is really fucking paying attention to the crypto. So this is going to be more interesting, I think, again, is to try to figure out, when is this a possibility? What do people think? Are institutions here? Again, it's important in terms of the sort of, at least the trend that we were on. We used to really use it for some flows. Now we don't have it, just sort of like the dollar, right? So we want to be aware of it. And all of us like Bitcoin anyway, right? We all made money on Bitcoin. We don't want to see it go to zero. So we'll continue to watch that and see if maybe we'll get something. Maybe we'll get something. I don't know. If there was going to be some sort of institutional reaction, it would have been today. We didn't see any. So keep that in mind. Otherwise, folks, we're, again, rated all-time highs. Don't let that candle fool you. Don't let articles fool you today. The risk-on behavior is still here, right? There wasn't much of a move. We were down 0.5% on the S&P. Look at the NASDAQ, right? NASDAQ less than 0.5%, which is the area in which would be most negatively affected by what we heard, and yet it wasn't. So, again, banks were break even, heading to the upside. So everything looking very bullish to continue. Excited for some more aggressive market moves, at least from us in the short-term perspective. All-time high continues. I'll see you guys in the morning. Enjoy your afternoon, evening, night, wherever you are. And until then.